This is your Wall Street wake-up call. This week is all about the Federal Reserve as officials gather in Jackson Hole, Wyoming for a conference. Here with more is Ian Weiner, the head of equity trading at Wedbush Securities based in Los Angeles. So Ian, yesterday Fed Vice Chair Stanley Fischer was pretty bullish on the economy, saying economic growth is expected to pick up in the coming quarters. Does that foreshadow what we'll hear from Janet Yellen in her speech on Friday?
I think she's going to sound pretty balanced. If you go through Fisher's speech, the reality is, yes, he was pretty positive on the overall growth of the economy, but he was also pretty concerned about productivity growth and how that could be a secular headwind against the economy over time. So, I think that there's a lot of doublespeak going on and a lot of different messages from different members of the Federal Reserve, which I guess is to be expected given the number of people that are commentating. But I expect her to be pretty balanced and just to kind of go with the same message she's been going with, which has been that it's sort of data point dependent rather than anything else.
So many are saying that she's going to use this speech to prep the markets for a September rate hike. So when you say balanced, does that mean she's not going to leave any indication as to the timing of the next hike?
I would be surprised if she did. I don't know why the market seems to think that she's going to be talking about a September rate hike or prepping the market for a September rate hike. It doesn't seem to me like the data's strong enough for them to do anything, and I think that the only reason you would think that is because they've really been following the assets more than the actual data, and because the S&P 500 is at an all-time high, they're more likely to raise rates. But I think the issue that she's running into is the same issue as before, except it's now even more exaggerated, which is that every other central bank in the world is undertaking massive quantitative easing, and to raise right now would further strengthen the dollar and further have an issue with the overall U.S. economy.
Although if she doesn't set the stage for a September hike, she would be further playing into the market psychology, because markets are expecting a 26% chance of a September hike and 55% in December. So doesn't the Fed not want to be seen as following what investors want to happen?
I'm sure they'd love to not be seen doing that, but the reality is that's exactly what they have been doing.
Yeah.
If you look at the different times they've inflected and talked more hawkishly or dovishly, it's been quite a coincidence with when the S&P 500 got hit earlier in the year and where it is right now with the S&P 500 at all times. So to me, they're much more asset price dependent than they let on to be.
And just quickly, is there anything that you think she needs to say, Janet Yellen, on Friday?
Well, it depends on what you're rooting for, but I think she needs to come up with a clear message as to how exactly this has worked so far and how exactly she thinks it's going to work going forward. And ultimately, I think they're in just a very tough spot that unless we get this huge fiscal stimulus that everybody seems to be counting on, which seems rather unlikely to me, but unless we get that and some kind of regulatory reform, it just seems like they've run out of bullets at this point. And it's all going to come down to whether the government can get things fixed or not. And if they can't, I'm not sure what the Fed's going to be able to do at this point.
And before we let you go, do you think we'll get one more rate hike this year?
No, I do not think we'll get another rate hike this year.
All right. You said it here. Ian Weiner from Wedbush Securities. Thank you for joining us.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.